Up to this point, you've calculated the client's gross profit, which is gross income minus cost of goods sold. We are now ready to group and record the business's indirect costs and operating expenses. Business operating expenses are all costs involved in running the business, but not directly related to the purchase or manufacture of inventory. Operating expenses include costs associated with selling, as well as administrative expenses and general overhead. Any business expense is considered deductible if it is ordinary and necessary in operating a trade or business. If you find it difficult to determine whether or not an expense is ordinary and necessary, ask yourself the following questions. Was the use of the item related to a business activity? Was the expense incurred with the intent to realize a profit? And the last question, are operations and management activities extensive enough to indicate operating a trade or business? For instance, purchase of hypodermics may not be ordinary and necessary for a landscaping business, but they would be for a doctor's office. The most abused expenses I've found are travel, meals, and entertainment. I've spoken of these a few times before, but let me discuss them again here. Lodging expenses can be deductible if all of the following rules apply. The deductible lodging expense must be temporary in nature. Only lodging expenses during business activities are deductible. Non-business side trips are not deductible, as well as any other expenses incurred doing personal activities. If the business trip is completely for business, then all of the expenses are deductible. If the trip is primarily for business, then all the transportation expenses of arriving and returning are deductible. If the trip is primarily for personal purposes, no transportation costs are deductible except on the days the business activities are conducted. The general rule for travel deductibility is that if over 50% of the time spent in travel was for business purposes, including the time spent traveling to and from a destination, then the travel expenses are 100% deductible. For instance, if your client was to take 3 days driving across country to attend a convention, spend 1 day at the convention, 6 days visiting with family in the city where the convention was held, and then spend another 3 days driving back home, the entire cost of travel to and from is deductible. This is because he spent 7 days engaged in business activities and only 6 days engaged in personal activities. Meal expenses while away from home on business are only 50% deductible. These meals pertain only to the time when there is a business purpose for the meal. For instance, in the example I just gave with the travel expenses, the only meals that may be deducted would be those eaten during the 6 days traveling and the 1 day of the convention. Meals for the other 6 days spent visiting with family are not deductible.
Entertainment expenses, unfortunately, are no longer deductible under the Tax Cuts and Jobs Act. A business owner may still wish to meet with clients in a setting that will once have been deductible just for convenience, but the associated expenses will no longer be allowed to be deducted. This is at least partially offset by the new qualified business income deduction in most cases. We will discuss QBID later in this session as it applies to all pass-through entities such as LLCs and S-Corps as well as sole proprietorships.